Hello, welcome to this new edition of the Euro 2020. We have with us María Demertzis, who is the co-author of one of the articles in the yearbook. She, together with Gregory Claes and Eleanor Cameron, wrote the piece on monetary policy. And thank you, María, for being with us.
Thank you, Fernando, for having us.
The title of your article, your paper, was actually pretty forthcoming, I say. The title was actually, "What will the ECB do in the next recession?" Surely you were not expecting to have so soon a recession, and certainly not this type of recession. But the recession is here, clearly. It is probably the greatest that we have seen, certainly in peace times, and probably even in many war times also. Hopefully it will not be as long as many others. But the question remains. So what is the ECB prepared? Has it reacted much better than the last time? What is your general assessment of the ECB reaction?
Yeah, I mean, you're quite right, Fernando. We were not being prophetic. I mean, I think we were not expecting to have quite such a shock. And to be frank, I don't think that any institution is ever really prepared for such a size, a type of a global shock, right? And it's not even a financial shock; it's a real economy shock. I mean, I think that certainly the ECB is much better prepared, was much better prepared than it was, let's say, in 2009 to meet a smaller shock. But even again, it didn't have enough tools, I think, in its portfolio. This time round, it does have, it has two things. It has more tools in its portfolio, and it's a lot more quick to react. I think that is a notable difference from previous time. You know, the whatever it takes speech took a long time to come in the context of the financial crisis. This time round, you know, the QE was there. It was immediate, and it was big immediately. So that I think is good news. I think the ECB has learned to dare more than in previous times, and quite frankly, the size of the shock requires a lot of daring. So I think the ECB was better prepared, and it has done a lot. Probably will do more in the future.
And on the new, you mentioned also in your book, in your paper, the toolkits, the different measures, the different policy measures that the ECB can take, and indeed in this crisis, it seems like it's taken almost all of them. But surprisingly, it has hesitated and in a way has indicated it will not go farther into negative interest rates territory. And that is a change. How do you, I mean, do you think, I'm right? Do you think that the ECB is clearly not willing to, and therefore is somehow reassessing the pros and cons of the negative interest rates? And do you expect it to change that attitude if things get worse?
My sense is that the ECB is examining all its options. So, you know, going further negative into the rates is one option. The other one is more QE. The third one is possibly helicopter money, something that we haven't seen yet, but it is an option. And then, of course, you have the short-term liquidity measures. And you're quite right. They did a lot of the QE, and they have done a lot on the providing the liquidity, which is there to sustain the system. I guess, and you know, that's my guess, that the ECB is trying to minimize the risks that it needs to take, and also in terms of introducing distortions into the market. And also is looking for measures that are going to do well across a variety of circumstances. And my sense is that it feels that the QE is a way of doing well in a number of different fronts. Possibly breaking the doom loop with the fiscal policy, institutionalizing financial stability, allowing countries to go out in the markets and borrow cheap. So it's doing, if you like, a number of different things in the context of very high uncertainty. And therefore, I think it's trying to minimize the distortion that it introduces necessarily in the market.
You mentioned helicopter money as one of the tools that is there available if need be. But this is really going too far into fiscal territory. I mean, do you think that the ECB was already immersed in a fierce political debate, not only in Germany, but also in other countries, and also in the realm of central banks in general? How far can monetary policy become quasi-fiscal policy? And the helicopter money is really sort of a very borderline. So do you expect it? Do you think it would be used if things get significantly worse, if there is a second of the pandemic and whatever. Hopefully we won't need to. But is this possible, or will we complicate life a lot in the institution building in the Eurozone?
You look at this point, I'm not really going to exclude anything, because I think that you need to react to the types of the shocks that we're seeing. We thought the financial crisis was in a lifetime shock. 10 years later, we have a pandemic global crisis, hopefully once in a lifetime shock. But if you have a once in a lifetime shock every 10 years, that's not quite, right. You cannot really exclude anything from happening. My sense is that the ECB agrees with your assessment that helicopter money will be really much closer on this borderline with fiscal policy. Remember that the critics of the ECB have already accused it of really doing fiscal policy. I mean, it's still operating in the realm of the legal. Of course, the ECB will not do something illegal, but in terms of the spirit of its macroeconomic management, many would agree that you're pushing the borders here of what is monetary policy and what is fiscal policy. So that border may be crossed if you were to do helicopter money, or it might be even come closer to crossing it. So I think the ECB is wary of that's my assessment of this. I think the ECB is wary of that, so it will try to avoid it for as long as it can.
Now, the ECB has repeatedly said it is very concerned about the potential fragmentation, financial fragmentation of the Eurozone. Luckily this time, and this is one of the main differences from the previous financial crisis, we have not seen substantial fragmentation in financial flows. We have not seen spreads widening nearly as much or remotely as much as we did in the previous crisis. However, some level of fragmentation remains. And in fact, there hasn't been any advance in financial integration in the Eurozone. What can the ECB do regarding that? Because that seems to me one of the main purpose or reasons for the European Monetary Union.
Yeah.
Or put it a different way, what else can we do to foster a banking union and a capital market union?
Yeah. Well, okay, right. So first of all, we haven't seen the divergence of spreads simply because the ECB has basically allowed everybody to go in the markets and borrow, and so basically meet the financial needs that every country has. This was important, because if it were the reaction to the current shock would have been very, very different if the ECB hadn't been helping in this respect. So that's one thing. Then there is the financial fragmentation. Absolutely. I mean, I think you're absolutely right. We still haven't finished banking union, and we have made very little progress on capital markets union. And I really regret the latter in particular, because some of the things that we are seeing right now, the indiscriminate support of all companies in order to maintain some economic activity and rescue the single market, necessary though it is, would have been much better served if we have a full capital market union. It would have been a lot more resilient in this respect. And now I think we are going to introduce distortions to the single market as a result of that. So the question is, what can we do to promote it? Well, I think we need to get serious about introducing a different financing model in Europe. Finish banking union first, but then introducing an alternative financing model, try to promote capital markets, because actually what we observe right now is that the shadow banking is picking up, which is some sort of money market finance, but it's not really a capital markets union, right? It comes with risks. Shadow banking comes with risks. It would require regulation. It would require different things. I think here we need to get serious about providing the right conditions for markets to thrive, something that is going to help us also provide for the next growth model.
Yeah, now the other question, of course, is what is going to happen to the famous European safe assets? I mean, if there's one thing that makes the ECB distinct, still today distinct from any other large advanced central bank in advanced economies, is the fact that it operates without its own paper, without its own money. In a way, it operates through national sovereigns. Do you think that given the fact that the ECB has, the European Union has now announced a significant fiscal package, and actually a package that will be financed with EU debt, are we closer to have a safe European asset? In a way, are we closer to what some economists call the Hamiltonian moment that the European Union needs?
First of all, the package has not been agreed yet. So,
let's assume for a while that it is before the end of the year.
Yeah, no, but I think we will. I mean, there will be some package, right? And the question is whether it's going to be more in the form of loans, or it's going to be in the form of grants, and then of course whether it's going to be a levered product, so a mutualized debt, or it's going to be money in the budget. My sense is that it will, and I don't think I would call it a Hamiltonian moment, because there isn't really a fiscal federation coming out of this. But I think if you asked me last year, do you ever think that we are going to see in our lifetime a common asset? I think I would probably have said no. Here we are a year later, and we are probably going to see a common debt. So I think, yes, we are closer in this respect, and importantly, we set a precedent. Those who are critical about the current packages are very much critical, because they're worried that even though this is announced as a one-off thing, it might actually stay with us, because as we know, there's nothing more permanent than temporary measures.
Exactly.
So I think, yes, I think this is of great significance in the architecture of EMU. And once we get used to the idea, very much like we got used to Zoom meetings. Once we get used to the idea, I think we will see the benefits of this, the mutualization of risk in terms of supporting and promoting the single market and the single currency. I'm hopeful that it will become a reality.
Well, thank you, Maria, for your comments, because you've made up a couple of very strong points here. One, you think, and I think we all would agree, that the ECB this time has reacted much faster and much more resolutely with a significant package all through different policy areas. Second, that we may not be getting close to a Hamiltonian moment, but certainly we are very close to having at least the beginning of a safe European asset, some common debt, and in a way, this probably will be my very last question. Remember, we used to talk about sort of a parallel risk reduction package and mutualization package. Now, the mutualization seems to be going. Now, the risk reduction is forgotten for the time being, for obvious reasons. But do you think it will be at some point a point of conflict? Because the crisis is affecting the balance sheet of the European banks differently, depending, of course, on the sort of the host country, home country.
Yeah, a very important question. I have always thought that the dichotomy between risk reduction and risk sharing is a false one. You cannot have one without the other, and have a robust system. Think about health insurance. We have both insurance, but we promote healthy lifestyles. That's exactly the same thing. You need the structural reforms to increase the health of the system, but you need the risk sharing to ensure that you have the insurance if things do go wrong. So I had always regretted that it was one or the other. You need both, and you need them simultaneously. What's interesting about the current events is that it is now the risk sharing that is moving forward, which had always been the sticky point. That had been the sticking point. Now that, with a bit of luck, we're overcoming that kind of stickiness. I think we should not forget that we need to go back to the structural reforms, because only the marriage of the two will robustify the system.
Well, thank you very much, Maria. This is a very strong point and a very important one. We have to work in tandem in risk reduction and risk sharing or risk mutualization. Surprisingly, risk sharing is moving faster now, but risk reduction will have to come back in the agenda. Anyway, it's a pleasure to have you with us as usual, Maria. We look forward to having you again next year in the year 2021. And thank you again.
Thank you very much, Fernando, for hosting me. Thank you. Always a pleasure.